options before Chandrababu Naidu to honor farm loan waiver promise. With the Reserve Bank of India not inclined to give nod for rescheduling of crop loans citing good yield, the Andhra Pradesh government has no other option but to think of alternatives to mobilize resources to keep its promise of waiving farmers' bank loans taken for agricultural operations. The financial position of the new state is not good as it is left with a physical deficit of more than Rs 15,000 crores after its forced separation from Telangana. The chances of the central government coming to its aid on this matter also ruled out with the statement of Union Minister M. Venkaiah Naidu recently. Further, the Fiscal Responsibility and Budget Management Act limits the state's borrowing capacity, which would be somewhere around Rs 15,800 crores, while it requires nearly Rs 42,000 crores to fulfill its promise to farmers, waivers and self-help groups. Experts say loan repayment capacity of the state is almost non-existent given its financial position, and the chances of raising security bonds are also bleak. So, what are the options left before the government in case the RBI refuses to entertain the plea for rescheduling of crop loans? How will it mobilize money for the purpose, and from where? According to experts, there are some options available to the government to mobilize the resources to fund the loan waiver scheme, which Chief Minister N. Chandrababu Naidu mentioned in case RBI does not allow loan rescheduling. One of those options is to sell away the red sanders wood seized by the Forest Department over the years from smugglers. About 11,000 tons apparently got piled up at various stockyards of Forest Department. The revenue from their sale in a global auction can fetch an income of Rs 1,500 crores to 1,600 crores. The preliminary process of getting permission for the sale and calling for global tenders has already been initiated and is in progress. Another option is securitizing the annual surplus income generated from state-run corporations like Beverages Corporation for about 10 years and get advances from banks. According to a banker, if the surplus income from such corporations is to be around Rs 8,000 crores per annum, it will come to Rs 80,000 crores for 10 years. A 70 to 80% of that amount can be taken as advance from banks. The amount can be repaid along with interest in installments. Although the government can expect substantial revenues from other taxes such as excise, for obvious reasons cannot be channelized for loan waiver. Apart from these options, the government can ask the farmers to cooperate and offer farm loan reimbursement in place of farm loan waiver. What options Naidu government proposes to choose may have to wait and see.